So let's do a quick recap on our thoughts for 2023 and some of the hits and misses. One of our big calls for the year was for the Federal Reserve to go on hold in the first half, and that that would be sparked by inflation starting to fall lower. Both of these played out very well for us. The Fed did pause in the middle of the year. Inflation came down from that 7% to around 3.5%. We'll talk about more about what the impact of that from the latest Federal Reserve decision is. But that was one of the big calls that we made, and that proved to be good. What we did get wrong, though, in all of that was thinking that the US would head towards recession, which would cause interest rates to fall a lot quicker than has actually happened. And the US economy has been so resilient, the consumer's been resilient, so that's really played out well for that kind of Goldilocks type scenario of higher growth, lower inflation, and now looking like lower interest rates as well. In terms of China, we thought again that probably that the government there would do a big stimulus. It hasn't happened, and that's really affected emerging market flows up until recently, and that affected India as well in terms of receiving any flows from emerging markets. So that was something that we felt China was going to be a catalyst for growth, but that hasn't really happened. I think the final factor that we got right was we felt that India's market would move up in terms of in line with earnings growth of about 15%, and that's been virtually spot on. Markets up about 18% year to date.